How's it going, taxpayers? Today it is close toward the end of May 21, which means we are officially done with the 2020 tax season, unless you file an extension. So right now this is a perfect opportunity for us to sit back, relax, get back up, and jump and start planning for 21's taxes. Because there is going to be quite a bit of different changes going on, especially when it comes to the child tax credit. Now with me, I've got some moral support from my children right here. They're going to help me kind of understand this, kind of walk through, and kind of get a better idea of how we should be thinking about the child tax credit around this time next year. So in order to put this into context, we need to know exactly what the child tax credit even is. Well, by definition, it is a tax credit. So it is a credit and not a deduction. So first and foremost, a credit and deductions are not the same thing. So in order to understand exactly how a credit works, we have to understand exactly how it plays into play. So a credit is a dollar-for-dollar reduction of your total tax obligation, whereas a deduction is only a reduction of your taxable income. So they are not one and the same. So to put this into example, let's assume, hypothetically, on your last tax return before you filed it, you owed the IRS $2,500. And when you were kind of reviewing everything, before everything was signed off, you noticed, wait a minute, I forgot a kid. I forgot to claim an eligible child on that return. Well, just to kind of put this into context, the most recent tax returns had a child tax credit of $2,000. So just winding back, hypothetically, you had a $2,500 amount that you owed the IRS at the end of your return. You figured out that we didn't claim a specific individual who was eligible for that child tax credit. So since it's $2,000 currently, you no longer owe $2,500. You owe $2,500 less $2,000, because again, credit. So you only owe $500. Now, exact same situation, but now let's talk about deduction. So same situation, you owe the IRS $2,500. We realize that we forgot a child on a return. However, it's not a tax credit. It's a it's not a child tax credit. It's a child tax deduction. So in this case, let's say it's still $2,000. This doesn't mean that my $2,500 gets reduced down to a $500 owe. No. Depending on what marginal tax rate you're in is what actually determines how much your $2,500 reduces by. So just to kind of put this into context, let's say you're in the 20% tax bracket. So just throwing out some estimated numbers. So instead of owing $2,500, you really only owe maybe $2,100 after a $2,000 deduction is taken into account. Again, these are just high-level numbers, but just to kind of throw you out there that a credit and a deduction are not the same thing. Generally, credits are worth more dollar for dollar if they're the same dollar amount as a deduction. So again, this is a child tax credit. It's not a deduction. So in order to kind of put some dollars into exactly what we're thinking about, let's kind of figure out kind of a timeline of how things are working out. When it came to your 2017 taxes, the eligible tax credit per qualifying child was $1,000. Now, that doesn't mean everyone got $1,000 because it is dependent on your level of income. It also depends on if the child is eligible, which again is a whole nother kind of concept. So I might have some descriptions down here in the comments, or sorry, I can't get my terminology right. It's down in the description, kind of a breakout of what your level of income is versus what is a qualifying child. Now, to take it one step further, there is a lot of gray area when it comes to children and determining if they're dependent and if they're eligible for the child tax credit. I'll be honest, that is a completely different video. Hopefully, spoiler alert, I'll have one here probably in the next few days. But again, it's not as simple as just saying, hey, every child gets a child tax credit. It's not that simple because does it biological? What if the child's biological? What if they're foster? What if they're adopted? What if they're not really my child, but they are all over here all the time? What if they're my niece, but I'm raising them? There's a lot of what ifs, and I'll have to cover that elsewhere. So back to the dollar amounts. For year 2017, the child tax credit was $1,000. Former President Trump increased that amount for taxes year 2018 up to $2,000 per qualifying child. Now, President Biden is going to increase it even more, but there's a little bit of caveat, and it's not as clean-cut as these prior two numbers. If the child, again, for 21, was born or at the age of 6 up until December 31st, 2021, then the child tax credit is $3,600. Likewise, if they're between the ages of 7 and up to the age of 17. Now, I realize as soon as I just wrote this down, I realized that it's actually not 6 years old for the $3,600. It's actually up to age 5. And if they're age 6 by the end of 21, then they actually fall in this $3,000 category. So I got to back up because I already made a mistake. So if they were born or age 5 by the end of 21, then they're eligible for the $3,600 tax credit. If they're between the ages of 6 or 17 by the end of 2021, the year, then they're eligible for $3,000. If they are between the ages of 18 and 24, but, caveat, full-time student, then they're eligible for $500. So, a little bit of a tier difference than we've seen in the past. In the past, it's just been a straight dollar amount. Now we've kind of got a stair step. So, a little more complicated, but hey, more money out there for us. But we get a little bit more complicated because when it comes to these prior tax credits, we only got to recognize them at the time that we did our taxes. So, in this case, usually around the start of the next year, or whenever you file your taxes. When it comes to these new 2021 child tax credits, you may actually be able to opt in for advance payments monthly starting July up until the end of 21. At this point, there's still so much information that's still being thrown out, and sadly, for every one IRS news article or whatever, there's like 25 from other people, and sometimes they don't line up. So at this point, there's a lot of information being spread around. I'm really just going off by the IRS website, which is still pretty minimal, so there's still quite a bit of information still to be had. However, at this point, what seems to be is everybody who had a child up until their 2020 taxes that had been submitted will be automatically eligible for those advanced payments. And it sounds like, from what I understand, you are automatically opted in to get the advanced payments. So we kind of have to take a step back and kind of see, are these advanced payments even worth it? All right, so now the big question is, should we opt in for those advanced payments, or should we just wait and take the full amount on our return? Well, it really depends on your tax situation and your preference. So to kind of get an idea of exactly what we're looking at, let's kind of look at a timeline and see how these kind of play out. So let's take a step back and let's do an example. So hypothetically, we have two very healthy individuals, two babies, for the year of 2020. And let's say they were both 3 years old at the end of 2020. So let's say they're twins. So we had one set of twins during the year 2020, and at the end of the 2020 year, they were 3 years old. So when we filed our taxes for the 2020 year just here recently, we saw the following. So it's 2020. So each month of 2020, and that's what all these letters up here mean, we received nothing, which is represented by all these green slashes. However, and this vertical line is the separation of years. So when it was 2021 and we were doing 2020's taxes, we got to claim $4,000 for those two kids. Because remember, the child tax credit for tax year 2020 was $2,000 per qualifying child. So we got to recoup $4,000 during 21 when we were doing the return for 2020's tax year. So again, you got kind of a jump a year. So just again, take a step back. Try not to get confused, because when we're talking about different years, we can get wrapped up pretty quick. So again, that's how everything has been done before. So in this case, we didn't receive any advance payments when we did 2020's tax return during 2020. So again, whether it was January or April, whatever, we got $4,000 of potential credit for those kids. However, again, we just learned that those new payments for 21 are now stair-step, depending on their age, if they're a full-time student, and so forth. So as of right now, it seems like, again, if you don't do anything, it sounds like you are automatically opted in for the monthly payments. However, depending on, again, your tax planning goals, your financial well-being, and so forth, it really depends on if it's even worth doing the monthly payments or not. So, I guess in terms of timeline, if you're automatically opted in, we're not going to receive any payments until, at this point, from what I'm being told, it's going to be July will be the first official payment. And there will be a monthly payment from July to December. So 6 total payments. And the goal, from what I'm reading, is they are going to release up to half of that credit by the end of 2020. So, in this case, actually probably even better to start with the opt-out. So again, two children who are going to be 4 years old at the end of 2021 will be eligible for the $3,600 per qualifying child amount. So in this case, total of 2 of them would be $7,200. So the whole idea of the advance payments is to actually get you half the money of the available credit during 21, and the rest of it when you file your taxes for 21 at the beginning of 2022. So in this case, for children 5 and younger, are eligible for a $500 payout starting July for 6 months. So in this case, we had 2 kids, again, $300 per each. That's $600 a month. That's $600 from July to December. 6 times 600 is going to be $3,600. So what happens during this month, or this year, excuse me, is during 21, you're going to get a cash payout of $3,600. Sounds great. But it's an advance on a tax credit. It's not just free money, it's not a grant, it's an advance on your tax credit. So what happens is, when you actually do your taxes, you've already recouped half of that amount. So you don't get the full $3,600 times 2, because again, in this case, or whatever the child's tax credit is times the amount of qualifying children, you only get to claim the amount that you're total eligible for, less the amount that you've received in your advance payments. So again, if we opted in, which again I think is pretty automatic, we'll get $300 per qualifying child if they're under 5. In this case, we have 2 4-year-olds, times 6, so 6 months, July through December, which means we're going to recoup $3,600 in 21. So when we file our taxes next year, we get to recoup the second half of it, in this case, $3,600. So that sounds pretty odd, because we just thought, hey, wait a minute, we got $4,000 last year with the same set of kids. We're going down, so it's not worth it, right? Well, again, now let's talk about opting out. If you opt out, it's the exact same situation that we've probably always seen. There are no advance payments, there's no advance on the credit, you just recoup it all at the time that you file your return. So in this case, again, 2 children, they'll be at they'll be age 4 by the end of 21, because they were age 3 for 2020. I gotta get my story straight. So they're eligible in total for $7,200 of the available credit, but we're not going to take the advance payments. So in this case, for 2021, we're not going to get any money up front. But when we do our taxes for 21 at the start of 2022, we're going to pick up $7,200 of credit, not half of it, because we decided not to take the payout. So here becomes where tax planning becomes essential. So the question becomes, which is better? And again, that's a very subjective question, and it gets pretty complicated and pretty cloudy, but here is just kind of a 30,000 foot overview of, what would probably be better. Ideally, your goal is to not have a big refund, but also not to have you owe a lot. I mean, no one wants to owe the IRS at the end of tax season. So the question you have to really think about is, where was I at the end of 2020's taxes? So in this case, let's say hypothetically, we owe the IRS $1,000 at the end of at our 2020 taxes. So here, again, just a few weeks ago, when the 2020 tax season has been wrapped up, you owe the IRS, I think I said $1,000. So you owed $1,000, which again, it was hard on your wallet. You obviously don't want to do that again. You kind of have two options. Assuming your income is relatively the same, you haven't had any more kids, your tax situation has not changed very much. As of right now, tax law isn't changing, doesn't seem to be changing a whole lot, other than, again, this is the big thing on the platter right now, it's the child tax credit. So again, if you go from year 2020 to 21, but your tax situation doesn't change very much, you can almost, in a sense, kind of assume that you may owe $1,000 again, assuming you don't change your withholdings or what do you call them, estimated payments or anything. If nothing changes, you can almost expect to owe or get the same refund you did the prior year. Again, caveats are definitely need to be disclosed there, but that's a kind of a high level view of how you can tax plan. So again, you owed $1,000, so do you want to owe $1,000 again? The answer is probably no. So in this case, you'd probably be better off opting out if you want to go ahead and just cover it all at once. Because again, if you had 2 qualifying children for your 2020 taxes, you had a $4,000 credit. Whereas now, if nothing changes and you take the upfront payments, your credit actually goes down to $3,400, which means the amount that you owe isn't going to be $1,000 anymore. It could be $1,400, which is in addition to that $400 drop that we see here. Again, high level. I know some other tax pros are probably watching this grinding their teeth. Again, I realize I'm being extremely elementary and being very basic on this. But again, that's kind of a high level way to plan it. So you can take the advanced payments, but realize that you're probably going to have to owe more of it back. So you can get the money now, set it aside, put it into an account. If there's any interest growing, which I don't think there is, throw in crypto, whatever, and see if you can, make up the difference, and you'll be off and set, right? But more than likely, what a lot of people seem to be doing is going towards opting out, because at this point you're going to be recouping the entire child tax credit at one time. So in this case, again, you owed $1,000 last year, assuming that you still fall within the same income threshold and everything's kind of lined up, and you are eligible to take the full refundable amount, because that's another whole thing. This child tax credits could be refundable or not, or partially refundable, but for purposes of this, we'll say it's refundable. That means that instead of only $1,000, you may actually get back $6,200. So that $1,000 you owed was completely wiped out with this $7,200 credit, so you get the excess in return. So again, it really comes down to preference and how you want to tax plan. And again, for this video, it's really hard to get into the necessities without going over each individual person. So if you have your own tax person or someone who understands finances, please get with them to figure out what's the best option that for you. But at the end of the day, the more conservative, safer approach would probably be to opting out of the advance payments. That means your refund generally will go up from the prior year, or the amount that you owe goes down. However, again, if you do decide to take the advance payments and you blow it, you can almost expect to owe a little more next year. And again, if you blew it, you don't have that safety net of money back. Or again, the whole child tax credit is still being kind of discussed, it seems like. So the sad reality is things that I may have mentioned in this video may not be true here coming up. And if that's the case, again, I'll probably throw a disclaimer somewhere saying that, hey, this is what I'm saying here is no longer relevant. Also, one other thing is, again, it's not as simple as just saying, hey, every child is going to be eligible for this tax credit and every person is going to be eligible for this tax credit. Again, there seems to be income limits. And again, there's children eligibility, which again is a completely different topic. So again, probably, again, another video that'll probably be coming out here soon. But again, I hope this was helpful because again, at this point, this is going to be the biggest, I think, hurdle when it comes to planning for 21. And again, some good guys coming down the road which could really help out with your taxes, but if you don't know how you're doing it or how to properly plan for it, it could ultimately come out and bite you. So again, please consult with your own personal tax preparer if you have one. Feel free to reach out to me. I try to answer every email that I get. And at that point, happy tax planning, and we'll keep going. Thank you.